The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 21st magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's what you and we must master each and every day. So let's begin our day with an empowering belief. You know, the belief I'd like to discuss today is this. You and we have so much to give. You have much to give, so give it away to as many as you can. You know, Helen Keller once wrote, "I do not simply want to spend my life. I wish to invest it." Think about it like this, folks. Investing your life versus spending it. So what's the difference, or at least what's the difference that Helen Keller was writing about? Well, I believe it was this. One could spend their life doing a moderate amount of work to obtain a maximum amount of comfort if that's what one desired. And for many, that's really the case out there. Whereas Helen Keller believed that the greatest happiness in life comes not from the comforts and the pleasures that money can buy, but from the investments of the days of our lives in a purpose that transcends purely personal interest. It's my belief that each of us, you and we have a purpose for living beyond our own survival and pleasure. We are like a thread in a beautiful tapestry with a vital contribution to make. Invest in our lives, that requires the commitment of our resources, our ideas, our love, our talent, our time, our energy, our money, and those things that support our larger purpose. So here's the question that you and that we must answer each and every day. What is your larger purpose in life? And if you don't know what your larger purpose is, or you don't think you have one, still answer this. What could your larger purpose be? I mean, for those that struggle with it, if you can't figure that out, what could it actually be out there? Ask the question that way. You see, questions truly are the answer. Think of it like this. If you are able, or maybe think of it like this, if you are a wise investor, okay, then what you will do is you'll follow the most basic rule that a wise investor would, right? A wise investor never does what? A wise investor never does what, folks? Never puts all their eggs in one basket. For Mark Twain once said, if you do, you'll have to watch that basket. Is your life invested in only one thing? I personally believe that you have much to give. So figure out what that is, and then give as much as you can. Well, let's go check out these markets. Let's go see if they're giving us as much as they can as well. Right now, we've got the Dow up 41 cents. S&P is up 2. Composites up 15 points. Russell 2000 up 1. Apple up 11 bucks. It's up and over a resistance level. It's on its way to higher ground. We can take a look at that. Microsoft is trying to take on a resistance level. It's up 20 cents right now. Trading out at 35.16. Google, after an incredible day last week on Friday, it's trading out at 10.13. That's up $1.60 right now. Intel as well, trying to make its way to higher ground, taking on resistance level. Priceline now jumping into the fray here. Dollar-wise to the upside. PCLN is a ticker symbol. It's now trading at 10.74. So we've got the racehorse between the $1,000 equities out there between Priceline and Google out here. You've got Athena Health. That's up about $9, trading at $139.70. VF Corp, that's up $8 and change. Crosstex Energy up $7. Vauxhall Jet up 6.5. You've got First Solar, Hasbro up, Solar City, everything's up 4, 5, 6, $26 out there to the downside. Tesla Motors is the leader. It's trading off $6 right now. Intuitive Surgical down about $5, trade out at $3.71. Baidu off about $3.90 right now, trade out at $1.62. Our call number is 877-927-6648. If you give us a call, we would be happy to take a look at your stock chart. So let's go start off by taking a look at the New York Stock Exchange. Right now, the NYSE, it's up 5 points, so a flat session here. 183 net advancing issues. Impossible for the bears to actually take control of the marketplace. Not enough issues traded out here for that to take place in order to turn the summation index down. But if we do take a look at the New York Stock Exchange, it is up above its swing point from September the 19th. That high, 99.05. It is in a strong leg here. So here's the wider breadth of the market. It is a stronger move on that C to D leg than the A to B of this shorter A to B equals CD that we're looking at here. The A point being August the 30th, 92.46 and change. The B point being September 19th out at 99.05. And then the C point, the retracement down into that little rising price channel here, short-term rising price channel on October 9th out at 94.41. 1-to-1 A to B equals C. We'll take it to the 10-100 level out there. But actually the way that this is trading, it says it wants higher price. It says it would like to go visit 10,280. 10,280. Now, if we go put this on a monthly chart, let's do that here right now. 10,280, where will that take us to? Well, at 10,387, that's the actual October 2007 highs. So we are now going to be witnessing, or we should be, the New York Stock Exchange. This is the monthly chart, by the way, that we're taking a look at. And now the month is not over. If it were to finish like this, that is one heck of a strong candle that you are looking at out there. But what the New York Stock Exchange has done, it's closed inside that swing point. It's closed inside the October 31st, 2000 swing point. And we know, which the low of, by the way, is 98.24. When you close inside a swing point, what's going to happen? That's right. You're going to go up and you're going to test the highs out there. That's 10,387. And then, of course, this is the monthly chart. You close above that. Take a look at this consolidation pattern. The consolidation pattern inside the NYSE, about, we'll call it 10.3. Down to the consolidation lows out here have been right around the 4,700. So if we go just to make it easy on Steve, 4,700 to, we'll make it not 4,700 because we're what I said, 10.3. We'll make it 4,300. So we're looking at about a 7,000 point move inside the New York Stock Exchange when and if it closes above 10,387, because that would be a breakout above a consolidation area. So certainly the New York Stock Exchange giving us the signal here. Now it's a monthly chart, but giving us a signal that it's going to go test its highs out there, and that is very important. And the daily chart here is certainly confirming a powerful C to D leg. Oh, shoot, all that stuff got erased from my chart. Oh, well, Steve is going to have some work to do because I use that chart for my subscribers every day. There's probably a way that I can do something. Let me see if I can do this here while I'm on the chart here. Let me see. I didn't delete anything, but if I do hit undelete, let me see what happens. Oh, there we go. Phew. All that work saved. Thank you very much. Now, let's go take a look at the S&P 500. Let's go see what it is doing right now. It's up $1.32 out here. A very strong move. Let's take a look at the shorter term. Well, you've got the longer term A to B equals CD. That'll take you to 1776. That's coming off of the lows from June 24th up to the high on August 2nd and then back down to the August 28th level. So that is one A to B equals CD pattern out here. Let's go ahead and just erase that one. Let's take a look at the shorter term A to B equals CD here. This would come off of the low here on August 28th. That's at a price level of 16.27. The high out on September 19th at 17.2986. The pullback into the lows of October 9th. You can see the one-to-one pretty much has been completed here. That number would be 17.49. So far we've traded to 17.47.79. But a strong move underway. So we have two A to B equals CD patterns that take us to 1776. Where do you think price is headed to inside the S&P 500? Yep, it's headed to 1776 out here. That's on our S&P. That's on the daily chart. Excuse me. Let's go take a look at the Dow. weak link out here, but I think we took a look at one. We have this is the daily chart, big old big move here on Thursday. If you just take a look at, now it's not a hammer candle. If you take a look here at that, the bears were really trying to exert their effort, but that long lower shadow out here, even though this is the weak link, it's telling you about the strength that is inside the actual Dow here right now. So far, just a sideways trading range. It has made its 0.618 retracement. It did that with a wide-ranging bar, and the 618 retracement that I'm referring to, coming from the high of September 19th down to the low on October the 9th. The Dow now is going to at least get up to its highs, which is 15,709, but the Dow is not going to want to be left out of this party here that the New York Stock Exchange, that the NASDAQ is throwing. So the Dow at some point here is going to join, and it's going to at least test the highs, which will test the bottom of that rising price channel out here. I suspect that the Dow will want to get in on some action and actually get back above the September 18th, September 19th high out there. If we take a look at the Russell 2000 right now, that is trading up about 60 cents. So kind of a flat session as we speak. But, boy, the Russell 2000, just your 1-to-1 A to B equals CD, takes it to 11.29. But if we take a look at the shorter-term A to B equals CD, that's the one from September the 3rd's low all the way up to the high on October the 2nd, October the 1st, out at the 1087-ish mark. And then a shallow retracement. We can see an explosive move off of that C to D leg. Says 1137 is really the mark that it's headed to. So it's going to tag 1129, 1130, and then 1137 will be its next mark. That doesn't mean that's the extent of the move. That's just simply where the Dow, or where the Russell 2000 is headed to. Now, let's go take a look at the NDX 100. And as you can see here, the NDX is close to completing a 1-to-1 A to B equals CD. That's the one coming off of the lows here from June 24th. That's your 1-to-1 level at 33.78. So far, intra-session, it's been up to 33.69, but it too wants higher price. It wants to get up into the 34.64-ish range out there, and that is on the NDX. We're going to take a look at all of the ETFs when we come back from I guess we got a minute here before we go to the break, but we'll take a look at that. Here is the daily chart for the NASDAQ composite, just a thing of strength out here. If we take a look at its A to B equals CD pattern, the shorter term one, that too has not completed. You can see it's already above the 1-to-1 level. 1 to 1.272 will take it to 39.62, but this move here off the C to D leg, it's setting up to move up into the 4,047 level here, and that is on the daily chart for the NASDAQ futures. Right now, we've got gold trading up $2.50. And speaking of gold, folks, you've got just 1 day left to take advantage of the 60 for 600 reports out there. That is a celebration of Tom's 600th gold report. A incredible bargain, incredible value out here, making some incredible calls here last week. I could say incredible just a few more times to describe Mr. Tom O'Brien. But what you want to do is you want to take advantage of that incredible opportunity. The promotion, this ends tomorrow. So please get out there today. Don't procrastinate. Now is the time to take advantage of it. All the details are on the homepage of TFNN.com. Right now, we've got the Dow down 16 points. S&P's flat. We'll be right back, folks.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 $79 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, Dow's trading down about $7 out here. A relatively flat market. Not so flat in the NASDAQ composite. That's up 10 points, although only up about 0.2% out here. And, look, while you're over on the homepage of TFNN.com signing up for Tom's Gold Report, remember Andy Hecht is going to be putting on a workshop here, so you can get all the details on the homepage of TFNN.com. The introductory pricing for his newsletter ends on October 31st out there, so it's going to be an incredible workshop. I know I am looking forward to it. So all great information on the homepage of TFNN.com. Let's go back and take a look here at the ETF structures. Let's go see what we've got going on out here. Right now, we'll start off by taking a look at the S&P, the SPY weekly chart out here. Big, powerful candle last week. The SPYs here want to make the 1 to 1 A to B equals CD. taking up into the 178.38-ish range. Could be, I'd say, anywhere between 178 to 182-ish is where it is likely headed to. Strong weekly chart. Now, if you take a look at that, the red lines, if you're watching us on Tiger TV, if you're listening on the radio or your mobile device at tfn.mobi, you can always catch the archive of this show on Channel 9 or watch it live just simply by coming over to the homepage of tfnn.com, first signing up for Tom's Gold Report, then Andy Heck's workshop that he's going to do, and then over on the upper right-hand corner, you'll see this show here. You'll see a button with 3 little smartphones on that. Click on that, you'll get the show streaming live to you. And I'm showing a rising price channel with inside the larger rising price channel. The blue lines represent going all the way back into the March 09 time frame. There's another price channel that has occurred in here. And boy, if the spies ever gave us an opportunity, if they were to pull back into the bottom of that rising price channel, you would want to fire away full steam ahead. You can see how that level has been tested now on 3 or 4 different occasions out here, and each time that area is held. But a spy wants to get up to 179, 182-ish range. I'd say the 182-ish is more likely the case because then it will test the top of its rising price channel again. This is going all the way back to March of 2009. Let's go take a look at the Dow Diamonds. Let's see what the diamonds here. Let's put this on a longer time. How about that? A longer time frame chart as well. Now, on the shorter term chart, this is a weekly, but let's see if I can put up the monthly here without losing everything. The monthly chart, I don't have it. But that's okay. Look, the monthly chart is good to look at. We can see here that the Dow up and over its resistance level. So very strong resistance inside. It's not the Dow. I apologize. It's the diamonds that we are looking at here. Lucy in the sky with diamonds. 141.95. That's the October 31st, 2007, swing point high. We see on the monthly chart the diamonds. Now, volume out there, you can see that the diamonds are up and above that. On lighter volume, there were 307 million shares back then. And when the diamonds passed through that area, it was only on 116 million shares. Let me just update the chart, make sure I got all the volume. Yeah, I got to have the updated volumes in here. So very important, strong support level is at 141.95-ish range out here. Let's go back to the weekly chart. That's just less work for me to actually do out here. Of course, I need to hit the proper bar so here's the weekly chart. You can see that nice rising price channel that price is traveling in. Price did complete, just think, off of the March 2009 lows. It completed the 1 to 1.272. A to B equals C to up. That price projection was 156.88. It got up to a high of 157.06. And what we've seen here is really a consolidation market inside of the diamond. So if we take a look at this pattern here, consolidation level, I would say, looks a little like this right here. So inside the diamonds, we'll say the consolidation is about 146.50 up to a high of about, we'll call it 156.50. So you've got a 10-point move. You have a 10-point move if the diamonds are able to break above, well, certainly if they close above the high from September 20th, which is 157.06, you will see another 20 points move. That'll take the diamonds up to about 177 or so. Otherwise, right now, just traveling in a consolidation zone. This suggests to me that what the diamonds want to do is at least get up and test the top of that consolidation range, which is going to be in that 156.50-ish area. Let's go take a look at the Qs. Real strength here in the marketplace today. Apple is trying to take out a swing point, get above resistance. Apple's up $12 and change, trading at $5.21. So unless there's a big reversal during the session, Apple is confirming that it is going to move into the higher price levels. We'll take a look at that. There's the Q weekly chart out here. Let me come back here. There's the 1 to 1.272 off of the March area. There's your 1 to 1.618. A to B equals CD off of the March lows. That price is at 83.17. Right now, you've had the intraday high of 82.54, 83.17. Well, that's the minimum move out here. If we take a look at the other A to B equals CD pattern inside of the Qs, 80. Well, I'll have to do that when we get back from this break here. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's off 17, S&P flat down 45 cents. Let's go out to Fort Madison, Iowa, to Ken. Ken, thanks for calling. Thanks for holding. How are you today?
Well, I'm very good. Thanks for taking my call.
My pleasure. You wanted to look at Silver Wheaton, I believe?
Yes, I've owned it. I got stopped out at $23.50 or about that. I'm just wondering if it's a good time to get back in.
I like it. Let's take a look at the ticker symbol, folks, is SLW. And as we take a look at this equity right here, if we start off from the swing point low, June 26th, June 26 at the price of $17.75. What we're going to see is that this has formed a real nice 0.618 Gartley buy pattern with great Fibonacci numbers. So if Ken, if you and I were putting together a textbook today, we would and we wanted to show somebody what a Gartley pattern looks like, and we were explaining the Fibonacci summation numbers out here, we'd be talking to them about 0.618 and 1.618. This one is a textbook, because if we take a look at coming off of the low from June 26 all the way to the high, that key reversal session on August 27th, we'll see that the retracement low that was put in on October the 9th when it got down to 21.68 out there, we'll see that was a 0.618 retracement. We'll also see that the B to C swing points, that's really going from the low of September 13th to the high out here on September 19th, that was a 1.618 expansion as well. So we really have, this thing has everything in place out here. You then had a bullish sign inside of this equity, and that was this bullish engulfing candle on October 15th. So it says the lows here. I can't tell you whether the trade would work out, but to answer your question, my answer to your question is yes. This looks like a good trade to me. And, of course, I can say that because I'm actually in this specific trade, so it makes it a little bit easier to also say that. So it's got great Fibonacci Gartley buy pattern out here that was confirmed. We had another little gap up here with some decent volume, 5.4 million shares out here. So right now, just been consolidating sideways. I would say you've got a couple of different things to gauge as far as whether or not the reward risk is in it. Now, you were in it before. Is this really a shorter what's your time period trade that you're looking at on this, Ken?
Probably 6 months or so.
6 months. I think so. If you're looking at 6 months, then the ultimate outcome of any type of a Gartley buy or sell pattern is that the D point that forms here that actually completed the Gartley buy in this case is that D point becomes the new C point of an A to B equals CD up. So from a longer term horizon, if we have seen significant lows put in the metals, because these equities will go ahead and they'll follow along with the metals, then your A to B equals CD would look like this. And what you would be gunning for is probably somewhere between 33.10 and 36.20 out there. With right now it's traveling at 23.33. And your risk is that you need to go ahead and you should have a stop below the 21.68 mark out there. That would be my recommendation. So if you're looking at a longer term trade, you'd have maybe a wider stop than normal on this. And then all that does is changes your position size. So you take your risk. Let's say you had, we'll use 10,000 as an example, and I like to use 1% as my risk. So that's $100. And if you figure you've got about a $2 stop or so here, you take that 100 divided by 2, you'd say you'd go buy 50 shares. And then what I would do is if the trade is working, it's moving higher, there are points where you would go ahead and add to your trade. But I wouldn't take a larger risk here, and I wouldn't put too tight of a stop, because support of that Gartley pattern, the bottom there, is really is your support area. So you either have to wait for it to pull back, or you just simply reduce your position size now because you've got a longer-term horizon and you're gunning more towards that 33.10, 36.20 level. Now, you manage to trade along the way, but because you're having a longer-term horizon out there, what you're really looking for is this Gartley buy pattern to form the C point of an A to B equals CD up.
Okay, very good.
Does that help you?
Yeah, that's good. Good.
Okay, perfect.
You got time to look at another one, BX?
Yeah, sure. BX, is that BlackRock?
That's BlackRock, yeah.
BlackRock, okay. Tell me what you're doing with BlackRock. I'll go ahead and call the chart up on the screen. Are you in it, looking to get in it, longer term? Give me time frames and so forth.
I've been in it for some time. I bought it at $14.50, and I sold half of it at around $23.
Okay.
In a good stock for me.
First, congratulations on that trade. That's a nice move. BX, folks, is the ticker symbol here for BlackRock. Right now, it's trading out at 27.80. So you bought it, you say, around the 13 level or so. So this is a longer term trade for you, right?
Yes, I've had it for some time. I bought it at $14.50.
Okay, $14.50. So I'm going to put this on a weekly chart out here. And as we take a look at BlackRock, it's trading above its 1-to-1 to B equals CD. I want to see if the B point was crossed with volume. It looks like it was. So the B point on the longer term horizon for BlackRock, we're looking at the lows that were put in February of 2009. Ken, that was at $3.55. Makes a nice run up to some highs that formed in April of 2011 out in the 1960-ish range. And the pullback here looks like it was probably only about it's about a 0.618 pullback, a little bit less, so maybe 50% out there. When it forms the C point of the A to B equals CD. That was in October of 2011. So what it has done, number one, it took out the B point with volume. Your B point on this looks like was maybe the week of, 1909. Yeah, the week of May 6th. That had 21 million shares. And as this closed above it, it did it with 34 million shares. So this now wants to, at least on your A to B equals CD Richter scale, it wants to run to about 30.95. So 30.95, let's see what the retracement will be at 30.63 to 30.95. That'll be your 0.786 retracement and your A to B equals CD. Now, I think I heard one of your questions was maybe where should you put your stop on the remaining half?
I would like to know, yeah.
Yeah. So I would be targeting the 30.95 level. Now, stops. Let's take a look at the daily chart out here. So if I were to, first, what I'm looking at for first here is just some areas for you to be paying attention to on this equity. And the first thing that I'm looking for is any bearish signal. So the most recent bearish signal that we had, that you've seen a breakout above, was a trading session from October the 8th. And that was at 26.59. I think you said you took some profits around 27 or so? Or
took
20,
profit.
23
something.
23. So this, because it's up and over the highs from October the 8th, how tight of a stop? Tell me maybe give me a little bit more information on the stop that you're looking at.
Right now I've got a stop at 24.05.
24.05. Okay. So at 24.05, you're below the swing point from October the 9th out there. So I like that because now you've got a high volume-ish bar, which has got 9.2 million shares, but your stop is below that low. So if this pulls back and is coming into the October 9th level and it's doing with more than 9.2 million shares, just leave that stop in place.
Okay.
Because it may get hit, it may just touch the bottom of that swing point. But what this equity should do on any pullback, if it's really strong, the first place of support, Ken, should be the October 8th high, which is $26.59 out there. That is a bear sash candle. Old resistance should become new support. Hasn't been, I guess it's been tested maybe twice, a couple last week, October 16th and the 17th. So pulling back into that level. Well, that's less than 7 million shares. That would be nice out there. I like where your stop is at because you're looking at this as more of a longer term investment trade, and and you're below the most recent swing point. So I think you've got everything all set here.
Okay.
The only thing I would do is I would just maybe take a look at having a target in place, in case you're away from the system and you're making money, because you can always get back in. But I would, take a look at the next target level on this is around the $31-ish level, $30.95, $30.63, somewhere around there. Another $3 or so.
Well, that's good because I'm going to be away for a week. So.
Yeah, just put in both sides of the trade, and then whatever happens, happens.
All right. Thank you so much, Dave. You have a great week.
I will, and thanks so much for calling. Always good to hear your voice. That was Ken in Fort Madison, Iowa. We took a look at Silver Wheat and SLW and BlackRock. BX is the ticker symbol. Let's go take a look at some other equities here that are moving. We didn't look at what I want to take a look at. I want to take a look at the currency market here. Give me a moment. I want to switch over and take a look at something we want to keep an eye on. Dow is off $25 right now. S&P down $1.75, so not a big deal out here. But we do want to pay attention to our favorite currency pair, which set up a little 1.272 butterfly sell pattern. It did that here at 3 o'clock this morning. We saw a little bit of follow through, and then it went ahead and formed a hammer candle here at 5 a.m. And this is important to pay attention to because if we see a break of that hammer candle, which is at 133.99, it says we start to see a bit of a pullback back in the marketplace out here. If, in fact, that hammer candle low holds, we're just seeing more of a sideways move, working off a very powerful week out here. But that's on the Euro-Japanese yen. Just wanted to make sure while I taking a look at the market just turned a little bit negative, what was going on inside the currency pair. Right now, we're going to go to Aaron in Orlando, Florida. Aaron, how you doing?
Very well, and yourself?
I'm doing great. Thanks so much, and thanks for calling. You wanted to take a look at DRI, and DRI, is that is that Darden Restaurant?
Yes.
Okay. Tell me what you're doing there and how I can help you.
Well, I was thinking it was a hold, and I was just wondering what your opinion of it is.
Go ahead.
I was looking at like Fibonacci going from the low of January 4th of 2013 on a weekly.
On a weekly. So let me put this on a weekly here for you. I'll follow along to see what you're taking a look at. So you're going back to January 4th of 2012, okay?
Then,
or 2013, right? 2013?
Yes.
Okay.
Then I was going up to the 614.
Yep.
Of 55.25. It almost did 100% retracement.
Yes.
It missed it by about 50 cents.
Yes.
And then to me, it'd be putting it up into a minimum of 55 and possibly on up into the 60s. And I was just wondering if...
Now, you're in Darden Restaurants, you're in Orlando, which is where they're headquartered. And, and so you got the Olive Garden, you've got, what are all the restaurants that they own? They Smoky Bones still, I guess, right? Seasons 52, they have some of those.
Right.
Red Lobster, right? So they got a ton of restaurants out there. Now, are you looking at this, Aaron, is this a longer-term holding for you? What's your time frame outlook that you're looking at?
6 months to a year.
6 months to a year. So, this equity here, and you're right. You picked out the right swing point for an A to B equals CD, but because it pulled all the way back down to its lows there, which was coming into really the swing of either January 4th, like you picked out, or December 28th. That had 5 and 7 or 8 million shares respectively, and when it pulled back, it was pulling back with a bit too much volume. It had 10 million shares. Nonetheless, out here, This has some bullish activity at those lows. What I mean by that, you've got a bullish the week of January 14th that you picked, or January 4th that you picked out, a nice bullish engulfing candle out there. So that tells you that's where you've got your real support level. And your next support level that you have on this, where you have the next bullish engulfing candle, would take you all the way back into September 16th of 2011. So if this is a longer-term trade for you, what you really don't want to see is a break below 42.70. Not a break, a close below 42.71. So I would have that on my charts, because if this thing closed below 42.71, it'll head all the way down to the hammer candle from July 9th, 2010, maybe in the $37 range, and that would be a lot of heat to take. Right now, as it did come off of its 2 weeks ago, as it was coming off of its lows, it did it with expanding wide price spread and accelerated volume. So that's bullish for you. That was 25 million shares, and it was moving into that swing point that you're kind of targeting, June 14th, where you're thinking it's going to get back into the 55 range. So the bottom of that, 52.08. And that had 6.6 million shares. Now, last week it closed inside that with 18 million shares. So I believe you're dead on right that this equity, based on the weekly chart, should get up and should test the high of 55.25. Now, whether or not it's really got any more legs than that, the way that you would detect that, you would like to see this get above 55.25 with more than 7 million shares on a weekly chart out there.
Okay.
If it did, then then your next move, your next likely move in this equity would take you back to September 21st, which would be the 57.93 range. And there, that only has 10 million shares out there. So what this has done, it's got kind of a nice high-level consolidation pattern that is going on out here. Looks like a little bit of a head and shoulder pattern. But here's, this really marks your consolidation level, which is in we'll call it the 43 to 65 55 level. So you got about a 13-point consolidation. If it can break out of that area, which means getting above that swing point we looked at on June 14th, you might have another $13 to the upside. But you want to see it coming in there with volume. All righty?
Thank you.
You bet. That was Aaron from Orlando. That was Darden Restaurants. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow trading down 34 points right now. S&P off 2.5. NASDAQ up 3 points. NASDAQ Composite, NASDAQ 100 up 4 points out there. And, if you're ever in the Orlando area, we had our last caller, Aaron from Orlando. We were taking a look at Darden restaurants. Now, Charlie Woodsby and Bill Darden, they were the ones that actually opened up the very first, they were the originators. They are the proprietors of Red Lobster. Their first restaurant was in Lakeland. I can't remember the name of it. It wasn't Red Lobster, though. It was something Seafood Lovers or something. I don't remember what it was. But it was in Lakeland, Florida. It was back in the late 60s out there. Now, Charlie also owns Charlie's Steakhouse. Great steakhouse. There's one in Tampa. There's several in Orlando. But the original one is on Highway 441. That's one that I would recommend that you go to. If you are a meat lover, if you're a steak lover, that's the place to go to. Now, I'm not that much of a meat lover out there, but I do love lobster. And at Charlie's Steakhouse, it's kind of a wood pit. It is a wood pit that they grill things on. And I used to have businesses in Japan, and when folks from Japan would come over to visit, now because steak is they're using Kobe beef, and so when you order a steak over there, it's just small, thin slices. So when they would come over here to the U.S., they would like me to take them to a steak restaurant. So I'd take them to Charlie's Steakhouse, and like all great steak restaurants, they got that big old huge one. Who knows how much they weigh? If you can eat it, you need a wheelchair and probably an ambulance standing by, but you get your name on a plaque and everything like that. But just the cuts of beef, Now, my friends, they would go ahead, or whoever I was entertaining, they would order the steaks, and I would order lobster. Now, they take these big old lobster tails, spread them out so that you don't know. It's also like a butterfly and like a big steak, put them on the grill. It's the best lobster that I've ever had, just because of that smoky flavor and just simply the way that, in fact, you don't even need butter or anything, maybe just a little spritz of lemon or something. So imagine these guys would be eating steak, and they would be wondering, why did I? And I would order a big lobster, couple-pound lobster, because I knew the way that this worked out. Would say, would you like a taste of this? And the answer was yes, because I was wondering, why was I ordering lobster, not steak? And 100% of the time, they would go back, and if they were in for a few days, where do you want to go eat? They would say, can we go back to Charlie's Steakhouse? But this time, we want to get the lobster. So a great story out there. They did sell it to General Mills back in the 1970s. Along back then, also in the, when did Gino Palucci? He started Gino's Frozen Foods. He also was a Orlando area resident. Built a great country club as well, and in an area. He sold his restaurant, Gino's Frozen Pizzas and other frozen foods. He also sold them to General Mills. But just a great story of entrepreneurs out there. And in any event, let's go back and take a look at these markets here. We've got about a minute before we go into the end of the show here. Look, folks, we are in we're in the super bullish market, strongest leg since the March of 2009 timeframe. So, we have already seen where pressure has been put on the Dow, and, with, IBM breaking through consolidation areas and the opportunity for the bears to really take control of this marketplace, it's been plentiful. It's been abound, and they have not been able to do that. And we saw where buying the dips is now really back in fashion out here. So just pick your spots on any kind of retracements out here. If you are short this market, please be careful. Make sure that you're using stops out there. But this is a market that wants to travel higher. So that's what all the bars, that's what everything is showing us, not the bars where we go grab a beer and watch the Florida State Auburn game. Boy, that was a great game. In any event, folks, stay tuned. Basil Chapman will be up next. He'll share with you the Chapman Wave. After that, we've got our man Larry Pesavento. Today is actually a version of a 4P index date. If we didn't use ephemeris time, we only used Eastern Standard Time. After Larry, we've got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a great Monday, folks. Look forward to seeing you in the morning.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Paslow's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the opening call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the opening call, just visit the front page of TFNN.com. Also, don't miss Paslow's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.